Again, that as a channel, we are a firm believer on helping Indians reach their financial goals, and we are there to really handhold them to create wealth. So let's for a minute assume that the numbers which we've been talking about in terms of where the economy is headed and how soon the $5 trillion mark would be reached, then we could see a different India. Consumption will go up, investment will go up. There would be a binge spending in India. We'll buy more car, more mobile phones. I'm saying all the right things.
Absolutely, Nikunj. So one thing here is to look at China, because if you look at where China was versus India, in 2007, China was at $2,000 per GDP, which today we are touching at 2.2. In the next 10 years, they went to $10,000, the 5x multiplier. Let's assume a half of that, right? The biggest change is that people may not only spend more, but you have to save more, because we don't have a social security net in India which takes care of you post-retirement. So you borrow from the US, a 401k kind of a plan where you put into equities. I think that the key element for India is that the penetration of equities, despite mutual funds, and all of those campaigns, is still in a low double-digit, high single-digit. Numbers vary. Whereas in the US and the advanced countries, it's at 30%. So I think the way forward for the country, I think, is that increasing incomes, increasing penetrations will mean that the mutual fund industry will grow much faster than the rest of India's economy. And I think SIPs, you raise this question about FD versus this. I think FDs come from a response to fear. Equities come with a response to greed, two emotional factors. And I think SIPs is the ideal way where you match the greed factor by controlling the fear by putting it monthly, where you actually benefit from the volatility. So I think in addition to the mutual funds IA campaign, I think the SIPs IA campaign with ET now as champion is a very important thing, that people can come into this asset class, benefit from the volatility as opposed to being frightened and run away. So I think that's a very big thing.
Nilesh, MP says mutual funds sahi hai, but ICICI Prudential Mutual Fund is been saying small cap sahi nahi hai. Go for balance fund. Market में risk वापस आ गया है. So whom should I ask, the AMP chairman or the CEO of ICICI?
They both will give the same reply.
Are you sure?
Because in January 2018, ICICI Prudential said that mid-cap and looks overvalued and one should get out of mid-caps. That we said in January 2018. But right now what we are saying something different. Now we are saying that now at this valuation at which the markets are currently on mid-caps, and there has been a steep correction during the year on mid-caps. So now we are quite comfortable with investing in mid-caps. So as a company, we do change our stand, and that's how we believe, and that's how we guide our investors. Second thing, from what you had asked, Sandeep, on whether
fixed deposits and
fixed deposit, when fixed deposits rates increase, will not our yields also increase? Right? It is. And basically, when you compare the traditional industries, today a bank, if you see the private sector banks, they work, where is the fundamental strength of a mutual fund? That we have kept our expenses very low. So a private sector bank today might be working at 3% NII, another bank works at 4% NII, another bank works at 4.5%, 5% NII, right? These are the spreads at which they work. We work, our credit funds work at a spread of 1.6%. Which other financial intermediate works at the cost at which mutual fund works? So we have kept our cost structure low, and that difference in cost structure goes to the investor. So whether the interest rates are up or down, right? Even if the bank FD rate increases, our yields will also increase because our intermediation cost is low. So that's where the core competency of a mutual fund comes in.
So you've changed your view on mid-cap. I thought mutual fund managers never change their view. Their view is always bet on India, long-term hamesha acha rahega. They don't change their views.
So everybody has his positioning, right? Okay. So as ICICI Prudential Mutual Fund, we have taken a position that we will, when we believe in something, we'll go out and come onto your TV studios and say that. And we have been doing it.
No, we can do that needful here itself, and it's very large audience here. So as a firm, they believe that it's time to go to mid-cap. Now, Nilesh, when you see a headline like INFS, when you see a market cap erosion of $1 trillion, that is half of India's GDP. You know, we are talking in trillions today, so I'll frame my question in trillions also. We've seen a $1 trillion erosion in the American internet stocks. When you see so much of volatility up and down, then how does one deal with these scary headlines?
So there is a Sanskrit Subhasit which says that Dharmasya Moolam Artha. Sorry, Dharmasya Moolam Rajya, Rajasya Mulam Artham, Artham Mulam Dharmasya. So effectively, Dharma, Sukh and Arth, they are all connected. There is no gain without pain. So volatility is the price which we have to pay in order to achieve return. And whenever this kind of volatility occurs, it's a great opportunity. In 2000, we suffered huge pain because of TMT bubble. But today, most technology funds NAV is far higher than 2000 level. In 2008, we suffered huge correction due to global meltdown. Today, every single equity mutual fund NAV is far higher than 2008 bottom. So volatility is giving us an opportunity to make more money. And we are actually taking advantage of that to create more wealth for our unit holders.
So if you have to say mutual fund sahi in Sanskrit, how will you say that?
See, unfortunately, my customers not only speak Sanskrit. So mutual fund sahi hai, mutual fund sahi hai, mutual fund sahi hai in all the languages is the same. Thank you, you didn't ask me in Tamil.
Navneet, I'm not giving you the option to say SBI mutual funds. For this answer, you will not say SBI mutual funds. But for someone who's looking at investing for next 3 years, 5 years and 10 years beyond, how should one decide? No SBI mutual funds.
You don't want to give me the sahi answer. So I think that depends on each individual's, the financial goals, how much you are saving, what is your time, you said time horizon 3, 5, 10, but you also have to see the risk appetite and the other part of the portfolio. But broadly, I think a good part of it has to go into something like a multi-cap fund where you get the advantage of investing across market cap, large cap, mid cap, small cap, and depending on your risk, risk appetite and the liquidity needs, a part of it can go into the bonds. And you were asking question about the FD rates, but as Nilesh mentioned that when FD rates go up, bond yields will also go up. And I think we underappreciate the fact that over the last several years, when the world has gone into an extraordinarily accommodative monetary policy, into the negative interest rates, and now US talking about the fiscal expansion, we have run one of the most conservative and prudent fiscal and the monetary policies, which will impact both the bond as well as the equity returns over a longer period of time. So I think a decent allocation, which will be specific to each individual depending on their risk appetite, will deliver good returns over 3, 5, 10. But since you said that you can't say SBI, but otherwise I would have said SBI multi-cap fund.
Now, Vikram is saying by mutual fund sahi hai, mutual fund sahi hai. NSE also has a nara, and that nara is soch kar, samajh kar,
invest kar.
So that is NSE also. But then ET now ko nara is soch kar, samajh kar, invest kar, magar invest zarur kar. That is what we believe in ET now, right? Now I'm going to talk about how you think the landscape of investing is going to change. Exchanges will play a very large role there. As economies will become large, more complex derivatives, interest rate derivatives, currency derivatives, they will start increasing in. We did attend a conference beautifully, wonderfully hosted by NSE last week on ETFs. So what is your understanding? Because when the economies will grow, the need of capital and the need of growth is also going to change. How do you see the landscape changing in 4 or 5 years?
So I think it has to do with both sides of the story. I think there needs to be more capital formation. And on the primary side, there has to be a broader investable universe in which the mutual funds can invest in, which means you need to have more companies going public. You need to have greater public float for the inflows into mutual funds to get an opportunity to invest in a more diversified basket of stocks. Certainly, companies need growth capital. So whether they get that from the private market through private equity or in subsequent rounds list and get incremental growth capital from the public markets. If India is going to grow at 7, 8, 9%, there will certainly be a need for growth capital. And that will necessarily involve companies tapping the public markets for raising money. That I think is important because otherwise, if you don't have a broader investable universe and you have more and more capital flowing into mutual funds, you obviously run the risk that you don't really have enough investment opportunities. And then more and more money is chasing the same stocks and the same universe of investment opportunities, which will have adverse outcomes. So you want the primary markets to develop, you want the investable universe to expand, and all that will be a natural part of how the economy develops and how markets develop. Now, when you do that, you also want to, as I said earlier, make sure that we better intermediate retail savings into market-related products. That has, again, multiple dimensions to it. You certainly need to educate and keep educating the common man about the different products that are available, the risks associated with markets, therefore how they should think about allocation of their savings and what kind of products, etc. So that's an ongoing exercise. That will not stop. But you then need the right kind of products, right? And that obviously is dependent also on the asset management companies, the regulators, the exchanges, to make sure that you have simple products also as a start for the common man to invest in. The ETF market that you mentioned has a long way to go. Although if you look at it, what used to be only about 5,000 crores in ETF AUM, not too long ago, 3-4 years ago, has now crossed 1 lakh crores. So the ETF market has expanded, but still has a very long way to go because that 1 lakh crores is largely funded through the government disinvestment and EPFO and all that. The more retail money flowing into ETFs has a long way to go. And that is a simple product for people to understand. So product simplicity and product innovation is important in order to make sure that you better intermediate retail savings in addition to education. Then on the secondary market side, you certainly have to focus on liquidity. You have to focus on better price discovery, execution. You need to make sure that you have appropriate products from a hedging perspective. You need to make sure that institutional participation in markets goes up significantly. And I can tell you, since you talked about the derivatives market, the institutional participation in the derivatives market today is exceedingly low, whether it's mutual funds, insurance companies, etc. That has to change. Mutual funds sit on a large inventory of stocks. They have to be able to hedge their portfolios. Life Insurance Corporation and other insurance companies are sitting on a lot of inventory of equities, really don't participate very much in the derivatives market. The derivatives markets feed into liquidity in the cash market. So you need to focus on secondary market liquidity if you want markets to expand. So it is a very interlinked structure of making sure that growth capital is available for corporates, public markets are used to expand the investable universe for funds to invest in. Investor education keeps space to make sure that you better intermediate retail savings into markets. Product diversification and simplicity and innovation in order to make sure that you're able to absorb that capital. Secondary market development and liquidity to provide a hedging mechanism and better price discovery and execution. So these are all areas that have to work together in order to make sure that over the next 5 years, you have a market that's able to fund the growth prospects for the Indian economy.
Nilesh, what Nilesh referred to at the beginning was that volatility and risk, they need to be differentiated. Okay. Volatility and risk, they need to be differentiated. You've not shied away in the past from recommending different categories of mutual fund to deal with volatility. What is your view on, in general, volatility and how can one maximize volatility because we have elections, we have central bank policy action. So how does one deal in terms of classification?
See, one thing that what Sunil mentioned is the simplest thing would be that if you are, because it's an election year and we believe there is going to be a lot of volatility coming forward, one of the easiest thing that we say is do SIP for the next 1 year. And then whatever is your investable amount, divide it into 12 parts and do it during the year. That is one simple thing. Another, what we have tried to figure out in the last 5 years is that how do we create a dynamically asset management category, and now that category has created. There are every mutual fund in the country, a lot of mutual funds in this country are in this balance advantage category as defined by SEBI. I think that category is what the investor wants. How do we control volatility? Let whatever be the market, he does not have to think, like I said, that we will sometimes say mid-cap is good, mid-cap is bad, etc. He does not have to get into all that. If he does not want to get into all that, then there is a simple thing that just go into a dynamically asset management fund. By that, what I mean that when the markets are high, we ourselves will reduce our equity weightage, and when the markets are low, that will increase the equity weightage. So by that, the customer gets a good experience. We are in the business of selling less negative experience. I think if we give less negative experiences in the market, this industry will keep on growing. So if a customer is not greedy, this is one of the very good category for where first-time investors as well as people who want less volatility in a portfolio can come into this balance advantage category. And I believe in the next 3 to 5 years, this category will become bigger than the equity category because this is what the customer is looking at, low volatility and investment in equity. This serves both the purpose.
That's a category which as a house, of course, your house invented. So I've got just time for 2 questions. And Sandeep, if you have to, let's say, invest in a non-Reliance mutual fund, Sundaram, ICICI, you got SBI and Kotak. Which is the other non-Reliance mutual fund you will invest in?
I'll try to have a basket of all of them. I'll play safe with all of them. I'm good industry friends. I'll pick up one of the best friends from each one of them.
Okay, great answer. That's a safe answer actually. But my last question is to Vikram. And Vikram, we've been talking about global linkages. We've been talking about how Indian markets are aligned with the global best practices. We've been talking about how we need to align our exchanges with what's happening in international market. But I have a simple question. दुनिया में सारे मार्केट 1 जनवरी को बंद होते हैं, हिंदुस्तान का मार्केट 1 जनवरी को छुट्टियों क्यों नहीं होता? See, imagine 31st and you have to come back on 1st. Think of television anchors. So think of media sometimes. See,
I have no problem with keeping the markets closed. Unfortunately, it's not an NSE decision. So you'll have to ask the SEBI chairman. Yes, you'll have to ask the SEBI chairman why he believes the first should be a working day for everyone.
So don't blame on NSE because we get the list from NSE actually.
I know, but we have to dovetail into SEBI regulation.
Because of you, we have to also work.
निकुंज, मैं आंसर करूं? हमें दुनिया से आगे जाना है. So जब दुनिया सो रही है तो हमें काम करना पड़ेगा.